evening. Ira Epstein of Linden Associates with your metal market wrap-up, and this wrap-up is for Wednesday evening, the 23rd of December, 2020, just around 6 p.m. Central Time. So as we're looking at the markets, folks, a bit lower, I want to remind you, you have an abbreviated session. The markets are going to close early tomorrow. So about noon Central Time, you're done with most of these markets. Is the trading going to be thick and heavy? I doubt it. It's going to be lightened up quite a bit. You can see that you're backing off tonight in these metals. Copper had gotten down to 347.90 today, and it's back up from there almost, 7 cents? That's what you're going to get at this time of the year. Silver is moving at $1 a shot. Keep your powder dry is what I tell people at this time of the year. Stock indices higher. We're waiting to see what happens with President Trump's request of Congress. How's that for the right word? He didn't do a veto of the COVID-19 bill. He did do one of the defense bill. I don't know what's going to happen on the COVID relief bill. We'll find out more tomorrow. There's supposed to be a call for a vote at about 9 in the morning, according to Ms. Pelosi, but that can change. You know how these things work in politics. And that doesn't mean that the vote will even take place, or it might be blocked, and then they'll do a full House vote to get everybody on record. It's politics at its very worst, but it's playing with people at Christmas time and in their pocketbook. You know, the holidays are nice, but there's people that can't eat. It's very sad. Energy markets fairly quiet, a little bit of a bounce tonight in the bonds and the notes. When I take a look at the weekly chart of closes of gold, you're down $19 so far. But the reality is, if you look at it, this market did get up to $2,000. It's given back about $135, $140 off that top. It's not a bear market. It's been an up market, but it's given back already in the neighborhood of, what is that? That's going to be about 10% or so, just round figures. So interesting. As you take a look at the chart here, when I put this on here and I look at the swing line study, the pattern is one of a higher high and a lower low. That is not a trend. If you're in an uptrend, you're looking for higher lows, higher highs, and a downtrend, lower highs, lower lows. You don't have that. You have the higher high, lower low, which is just whipping back and forth. What the market is trying to do from the looks of it is respect the 18-day average of closes in red. This is the 200-day moving average underneath it. That's your support zone. In moving average terms, your resistance is the 100, but when you put Bollinger Bands on, you can see that the resistance is much easier to see. Remember what a Bollinger Band is. It's an algorithm designed to keep the market trading within it 95% of the time. The reason it's not 100% is you want to be able to get to that band to either respect the resistance of it. If you're long, maybe that's where you're coming out. If you're short, maybe that's where you're lifting some shorts. If you had 100% of the time, why put it on the chart? It's never going to come out of the band. That doesn't make sense. The pullbacks, I look at the 18-day average as the line in the sand. When the market is over it, I have a bullish bias, under it a bearish bias, but right here there's no trend to have a bias with at all. When you look at momentum in the slow stochastics, and there are different momentum studies. Some people like MACDs, others like relative strengths. I've seen other indicators that they use. I'm very comfortable with this one, and there was even a fast slow stochastic. The slow one suits my style of trading, and in looking at the market, it's no longer overbought. Now, overbought is when these numbers are high over the 70 number and not going sideways over 80. And this market's been getting up to overbought territory on a regular basis and failing from there. You've got to learn to recognize what the markets like to do and what they've been doing recently before you just say, oh, I'm friendly and it's going to the moon. The market hasn't been saying that in any manner. The gold-silver ratio is still favoring the silver over the gold. When the market, and you look at the 18-day moving average, when the market is over that number, typically the market's going into higher prices, and it means that you need more ounces of silver to get 1 ounce of gold. When it's under it, it favors the silver, and it means you need fewer ounces of silver to get 1 ounce of gold. When we look at the silver market, it is still in a pattern of higher lows and higher highs. That's bullish. It is trying to support itself at the 100-day moving average in green. If it can get a rally out of here, then again, the upper Bollinger Band's the resistance. If you've been paying attention, each time you've come to that number, it's important. Can you stay over it for a short period of time? Of course you can. But the word is a short period. The market will adjust itself into that. Momentum, though, has been divergent. So you've had momentum like this, trying to point down, then you had prices shoot up. That's the divergence between the two. You want to get everything on a chart where it comes together. And you're not getting that, but that's not unusual going into the end of the year trade in much thinner areas. There's so many people adjusting their books, just getting out or getting in, loading themselves up, whichever way they think. Let's get to the copper. In the copper, once you lost the momentum right here, you had it what we call embedded. You had locked in the momentum all the way back here. And when that occurs, you're often moving higher, hitting that Bollinger Band and rocking and rolling against it. Once it starts to lose it, it's rare that it just gains it back. It can, but it's rare. And you can see the market flirted with that and then lost it again, and that was when the market started breaking back to what I call that line in the sand. Where are you now? How's the word neutral? You've got a higher high, lower low. You're fighting at the 18-day average, and you've taken the Bollinger Bands and narrowed them in from this big width narrower. Eventually you get narrow enough, like back here, where you create situations where it's you're in a pipe, and it's like a spring in a pipe, and you keep winding and it breaks out one way or the other. In the platinum market, you still have a downtrend. Lower highs, lower lows. You can see the correction that's taking place there. In the palladium market, a higher high, then you drop down for that lower low, no trend at all. And for the longest period of time, it's been trading between the 100-day and the 18-day average. That will not continue forever. So the longer it does it, it's winding itself up for a trade of some type. Last, the dollar index. In the dollar index, we have a pattern now. I can actually think that this area here should be pointing up. I think that you can now argue that this arrow is wrong. I should be having an arrow here pointing up and here. You have an uptrend that is staying under the 18-day average, so you have the differential there means that they're not together with each other. So the resistance is going to stay that number even though you're in a minor uptrend, correcting an oversold condition. Once this other number gets away from a 28 reading into the 30s, it's no longer oversold. But as soon as it drops back under 30, it is. So how do markets correct oversold conditions? They either embed. When you got oversold here and you came down like that, it started going sideways. Look at what the market did. It just dropped apart. When it loses that reading, it's typical to go to the 18-day average to regroup and then to work off that oversold condition as the market gets ready for whatever the next trend is going to be. If you like these indicators, we've put together with our good friends at Modern Trader 2 volumes. We've put them into a PDF for you about price charts, the different chart patterns, how do you draw trend lines, what are they, different moving averages, the different types. There's exponential, there's smooth, there's arithmetic moving averages, the different spreads, what do they tell you? Contangos, backwardation, what do they even mean, and what do they typically imply? You get into the options primer that we have, the money management tools. I really think this is all important. It's free. They come to you as a PDF. You can open them and away you go. You can print them out, do whatever you'd want from there. All you need to do is go to our website under free offers on the bottom right, sign up for it there. We'll get it right out to you. You can call my staff as well. They do pick up phones and we'll get this all out. In the meantime, I want to wish everyone a very Merry Christmas. I will not be tomorrow putting out anything in the way of these videos. Since the market closes early, we'll let that go and I'll get something going for you next week. This is your weekend video for this moment. If I do one, I might do it on Friday. I won't do it tomorrow, or I'll do it on Saturday, where I normally give you a weekend charts where that's all I look at. I may well do those on Saturday for you. You'll have to look and see if I decide to post them. I'll see how my Christmas dinner goes and what I feel like. You have a great holiday. See everybody at the very latest on Monday. Take care.